Well, 2019 marked another big year for retail bankruptcies. 23 retailers filed, including Payless, Barney's, and Dress Barn. That's on top of the 17 bankruptcies in 2018. And just this week, Pier 1 Imports announced plans to close up to half of its stores. That stock down nearly 60% in the last 12 months. It's now just a $20 million company. So what will the retail landscape look like in the year ahead? Joining us now to talk about it is Pauline Brown. She is the former chairman of LVMH North America. She's also the author of Aesthetic Intelligence. Pauline, thank you for being here with us. It seems like every time we talk about retail, everyone brings up that word apocalypse. I cover retail. I don't think we're there, but we're certainly shaking out some of the weaker players.
Yeah.
When it comes to the bankruptcies, do you feel like we've hit the bottom, or do we have many more weak players left potentially to close their doors for good?
I think we have many more weak players. There may not be many more bankruptcies, but there'll be many more closings. It was just announced today that Macy's is closing another, what they originally thought was 2 or 3, and it's going to be 15 or so. So I think there'll be shedding of locations across the board. We're just simply overstored, and big box are too big and too inflexible for the environment we're in.
But when we look at the consumer environment, everything still sort of points all steam ahead as far as the U.S. consumer is concerned. Balance sheets for households look good, but they have the ability to be discerning. It seems to me there's more options than ever before. As you look forward in 2020, do you think that we're going to still be buying stuff versus experiences, or is that shift further moving into the services and the experiences type of retail?
Well, it's been moving toward the services and experiences. In fact, now people say it went from services to experiences to transformation. So the real growth is in areas where people can transform their lives, whether it's wellness, whether it's entertainment, escapism in the form of vacation and travel. So I think that trend will continue, and you're absolutely right. The issue is not consumer spend, at least not at this juncture. The issue is simply we have too much merchandise sitting in places that are very unalluring.
What's the key metric to look at as to get a feel as how close we are to when the shuttering of bricks and mortar stores has kind of peaked? Is it penetration of e-commerce, and where are we on that level?
I would start just in terms of offline, our footprint. The next closest market in terms of per capita square footage retail space is Canada, and that has we are about 50% per capita more retail than Canada. And we are next one after that would be the UK, and we're about 4 times as much per capita retail. So some of the issues that are plaguing retail, it definitely has to do with the shift toward online spending, but some of it is just that the footprint is too big, period.